Hello and welcome to another update video about Ergo. This is the Ergo tether chart, the 4-hour chart. The last video I made, I think it was on the 24th of June. Yeah. So it's been really a while back. And let's take a look at what Ergo is doing now. So let's start again just as a refresher, because it's not a coin I cover very often. Let's just cover the higher level wave pattern. In the last video, everything basically that I told you is still relevant, and also what I highlighted in the last video basically worked out, so the chart fulfilled my expectations. Obviously, since then I didn't do another update and we have seen some interesting price action. So let's take a look at what Ergo is doing now. So from the beginning of this chart, we can see that Ergo created an impulsive wave to the upside to here that was at around $21 on the 17th of May. We then moved down basically like Bitcoin in a wave A. We moved up in a wave B. We did not go above the previous wave high. Bitcoin did it, for example. Here we didn't. So we moved up in a wave B and then we came down in a wave C. We can currently assume that the low was in. Yeah. In this wave C, we came down in a 5-wave move. We talked about that in the last video. 1, 2, 3, 4. And then we looked at it in the last video. Told you here that 1, 2, 3, 4, that one more low was missing. One more low was missing. That was also highlighted here by the additional arrow to the downside, that a wave 5 was still missing. In the end, it happened here. So basically the forecast from the last video worked out, with the exception that this became actually the wave 4. Yeah? And that we have to change this sort of, it was an ending diagonal, that is how it can be counted. Basically a descending wedge. It became a bit larger than originally anticipated. So that we had here in this overall move down, a 1, 2, 3, 4, 5, and within this 5th wave, 1, 2, 3, 4, 5. So all of that worked out. We made the low here at around 164. You can see that line still on the chart here. This is a line that I gave you in the previous video as a key support level and potential completion of the overall correction here. So, however, what is interesting now is what is happening here, because it is starting to go up impulsively. And we can already count 5 waves. 1, 2, 3, 4, 5. So it is, I think, due to be finished here. It has fulfilled all the requirements it needs to do in this 5-wave pattern. So it's certainly something to keep an eye on. If we take a look at the higher level, oh, by the way, before we go into the lower level detail, price target for the next all-time high, $35 minimum. Yeah, the 1.618 Fibonacci extension level, all the way up to the 200% extension. By the way, let's just change that slightly, because the low, we created a new low. So these might actually shift slightly. Let's just do this now. So no, they might not shift. I think I had it already at this level. So yeah, $35.50 minimum, all the way up to $43.50. In that range, that would normally be what you would expect in a larger wave 3 in the new or in the next all-time high. This area, yes, it can go higher, but at some point it gets less likely. The lower the market cap, the higher they can go, because they are more volatile, these altcoins. Yeah. Okay, so that we've covered that, let's take a look at the more imminent wave count. First of all, let's take a look at the Fibonacci retracement levels. I take the extensions out, but we still see the retracements. You can see that Ergo dropped briefly below the 88.7% Fib level. That was at 237. Now, this level is highly relevant. As I always mention, when a coin is for a longer period below that level, it's not good for the coin. Luckily, Ergo could break above that level, and the break above that level can be considered bullish again. We also broke above the previous wave high. You can see this resistance level, also one that I mentioned in the previous video, that we broke above and came down to retest, and now we're moving higher. And now, this is why I'm still zoomed out, because you can see here, we've now approached the 78.6% Fib level at 449. That is another key level that now needs to be broken to the upside. If this can be broken, this is a key level this would be another very, very bullish signal if that can be broken. But because we can already count 5 waves to the upside, we might not break it in this occasion. We might see the retracement first before we go higher. But if we can break it and retest it from above, it would take us, in my opinion, to 548, that next key resistance level, the previous wave 4 high, and going above this significant level, that will be very bullish. That is at $5.48, as I said, at $5.49. And to break above a previous wave 4 high is always very bullish because it invalidates a lot of bearish patterns that are still possible here. Yeah, this is how it is looking like at the moment. And at the moment, we can reasonably assume that the low is already in. Now, I can't give it like a 70% probability, but I would give it a 60% probability because we still need to acknowledge that should Bitcoin do another low, Ergo might smash down here this impulsive wave up. So it's not confirmed yet that this is super bullish, but at the moment it's looking really, really good. So these are the next key levels that I've just mentioned. And again, a move above 548, that significant swing high here is structurally a very important level, but also from an Elliott wave point of view, very, very important. And in the next larger wave up, it should be broken. If not, then we can't really consider this as a breakout. But let's take a look at the lower level wave count. Let's go to the 4-hour chart for that. So we can see all of this here as a very interesting impulsive wave to the upside. So there's different ways of counting this, but whatever happened down here isn't that relevant. We can count this as a wave 1. Then, for example, here 2 and another 1-2 pattern, or then just as a 1 and then an A, B, C, basically in a running flat. That's possible, but it doesn't really matter so much what's happening up here. So if we consider this as a wave 1, then the wave 2 to the downside, then here a wave 3. This was a wave 4 triangle, and we take a look at that in a minute. And then here now the wave 5 to the upside. In the wave 5, let's take a look at the triangle first to establish when, because this is now important for the length of the wave 5. Let's just take a look at when the triangle actually finished. So, triangle, we say, okay, from the triangle, that could have been the A, no. This here would have been the A, no, A, then here the B, the C, the D, here, and then the wave E to the downside. This would have also finished the wave 4. Then we can count here in the small scale a 1, 2, 3, 4, 5. That could be finished. This wave 5 could be finished. So we need to be ready for a potentially larger reversal. Unfortunately, there is not a lot of structure in this. So if I go to the 1-hour chart, what we can do now is to calculate how far would we most likely come down. Let's say this is really an impulse, so it looks impulsive, absolutely. This 5-wave move is complete. Then we can count this again as a wave 1. Oops. And then we would come down now in a wave 2. At least we need to be ready for that. This is, for me, the scenario that's going to work out with the highest likelihood now, as long as we stay below the $4.50 level, the 78.6% FIB level. If we break this substantially, then something more bullish is going on here. But for now, as we got rejected actually quite strongly, you can see that we got rejected quite strongly. We already dipped down quite a bit. For now, we stay above the trend line. That's a trend line worth watching. But we can now establish how far would we come down in a wave 2 correction. So let's draw the fibs from the low to the high. The minimum that we would actually expect is the let's go with 347. That's the 38.2% fib level, all the way down to the 61.8. That's how I would put it on here as a likely target for a wave 2 correction now. Yeah. We need to be aware that this is a long wave 5, so we can possibly expect us to come down here into the wave 4, in the previous wave 4 region, and that is exactly the 50% fib level. Yeah. That's often what happens in a larger wave 2 correction, to come down to the previous wave 4, especially if you have an extended wave 5 like this one. But this is what we need to be ready for. Now, what is the best indication that this is actually happening? Well, it would be a breakout to the downside of this trend line, and then also a break below the swing low here at 368. And then I think we have the evidence that we need, that we indeed go down lower into this region here again, between 347 and 276. Anybody who bought down here somewhere at that low, because we talked about one more low coming, if anybody bought down here anything, it probably doesn't harm taking some profits. I wouldn't take everything off the table here, certainly not, because we are officially here still in an uptrend, but taking some profits, you know, nobody got poorer by taking profits, but that's entirely up to you. And then we could expect here the wave 2 coming into this area. And when we reach this area, you know, we need to stay calm, you know, wait for a reversal, and then that might be another entry point here. This is certainly something that could be potentially interesting. As you can see here, that yellow line, that is the 50-day moving average. Yeah, 50-day simple moving average. And this one is currently at 254. As long as we stay above this level, we can be considered to stay in an uptrend as well. So this one is currently, as I said, at 254. In the next few days, it will probably go higher. It might actually reach this green reversal area and might provide additional support within this green area. And if we say, okay, we come down into this wave 2 region, and let's just assume it might be the 50% fib level, then we can also calculate a target for the next wave 3 to the upside. And that would take us to around about $8 as a minimum. This is the stuff that needs to work out to confirm the bullish case. And as I just told you, I think there is a good chance that we get rejected here now, that we don't get above the 450 level. Of course we could, and that move would be bullish and would take us to 548. But if we stay below that, I think we see this wave 2 correction now. We'll then move up and would then need to confirm the bullish case, move to $8. From here, we would then expect a wave 4 correction and a wave 5, and we have a larger wave pattern complete, which would then also, all of this movement will then be corrected. And let's also take a look. I mean, this is the 1 hour chart. Let's take a look at the indicators as well. Not on the 1 hour because they are rarely relevant, but let's take a look at the daily. You can see here, this is also a warning that we get towards the end of this uptrend. I mean, it's never absolute evidence, but it's a warning. We are, yes, in the overbought range. That in itself is not a problem. The problem is that we have made a bearish divergence, created a bearish divergence now on the daily RSI. You can see the high here is higher than that high, but on the price chart, that high here is higher than the previous one. So that means the momentum is decreasing. And if we can't maintain the momentum, it is always a first warning that things might shift to the downside. On the other hand, we've just only had a bullish crossover on the MACD, but also here, lower high, and also up here, lower high. So also a bearish divergence on the daily MACD. This is quite relevant. On the 4 hour chart, we don't see that. Yeah, there is no, well, here is a weak, yeah, there is a bearish divergence here, but it's quite far away from each other. But also here we are in the overbought range. Here on the 4 hour, we're still pushing higher, but take a look at this trend line here. If that gets broken, big warning here as well. And volatility is certainly going to increase the higher we go. On the 1 hour, you can already see this bearish divergence as well. We didn't see it on the 4 hour though, but on the 1 hour you see it. And here we've made a bearish crossover now on the RSI, but it's only the 1 hour chart, so I wouldn't put too much emphasis into this. Let's take a look at the 2 week chart. That's also a highly relevant one. And here for the first time ever on the 2 week chart, we've actually created a bullish crossover. Now, this doesn't mean we go down straight away or go up straight away, but it is sort of a longer term indicator and certainly very, very bullish. this looks really good. So for the long term, could really indicate that this downtrend is over. This is also, since the beginning of the correction, the biggest move up that we've had. As you can see, what we need to see for a more sustainable breakout is the move above the 548 level. And I believe this is really all I can tell you. The 4-day chart looks good as well, pushing higher here. Certainly would support higher prices, but again, I would expect, first of all, here a correction down in a wave 2, unless we go straight away above that 78.6% fib level. That would then take us to 550, but expect some pushback here. Yeah, and that's pretty much what I can tell you about Ergo. So very interesting chart at the moment. Definitely worth watching. I wouldn't enter now personally. Yeah, I wouldn't enter now. I would wait for that wave 2 correction, because it feels a bit like running behind the train that you missed, yeah, or that I missed because I didn't buy in. I don't have a problem with that because I didn't really watch the chart or observe the chart in detail, but it's certainly interesting having a chart where you have such a strong impulse and then a wave 2 correction is sort of imminent, and then I would always wait for that dip to enter. Okay, and that's my update about Ergo. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.